Ever find yourself wondering about the story behind the stuff you buy? Like, where did it actually come from?
And what does that tell us about, the bigger economic picture?
Exactly. Today, we're going to dig into some really eye-opening economic data. It might just change how you see global trade and American manufacturing.
Yeah, we're essentially tackling two big interconnected things today. First, how has the flow of goods from China into the U.S. shifted,
Mm.
especially compared to imports from, well, everywhere else?
Right.
And second, what's the current pulse of American manufacturing? Looking at investment, production, jobs, the whole picture.
And to get to the bottom of this, we're leaning on some solid sources. We're using data from the Federal Reserve Economic Data, FAD, as it's usually called.
Gold standard stuff, really.
Totally. We've got some fascinating charts that visually map out these import trends and what's happening in manufacturing.
And we're also pulling insights from a pretty sharp analysis on the FRAD blog. It's titled, Has U.S.-China Decoupling Energized American Manufacturing?
Good title.
It is. And ultimately, what we want to figure out is whether this noticeable shift in our trade relationship with China is actually sparking some kind of revitalization of manufacturing here in the States.
Our goal is basically to give you, the listener, a clearer view of these pretty complex economic forces that are, shaping things around us.
Okay, so let's maybe start with imports, thinking about where things come from.
Yeah, think about your shopping cart, maybe.
Uh.
Our first FRE graph gives us that bird's eye view. It shows U.S. imports. One line is just goods from China. The other is total goods imported into the U.S.
And what's really striking when you look at that graph, historically anyway, is the incredible rise of China as a source for U.S. imports.
Yeah, but definitely.
Between like 1990 and 2016, China's share of all the goods the U.S. bought from overseas went from, almost nothing, maybe 2%.
Tiny.
Yeah, tiny. All the way up to about 22%. That's a huge jump.
22%. Just think about how many made in China labels you saw popping up everywhere during that time. This data really puts a number on that feeling.
It really does. It quantifies that shift we all sort of noticed.
But here's where it gets interesting, right? Since 2016, that trend line, it's actually started heading the other way.
It has.
The graph shows China's piece of that U.S. import pie has shrunk back down. Now it's hovering around, 14%?
Around 14%, yeah. And that recent decline is, well, it's really interesting. As that FRE blog analysis points out, it's probably not just happening randomly.
Right, you mean policies.
Exactly. Policies like the trade tensions, the tariffs, and also things like the TTPS and Science Act of 2022. These were at least partly aimed at encouraging companies to maybe diversify their supply chains.
To rely less heavily on China specifically.
Precisely. To reduce that dependence. That's often what people mean when they talk about decoupling, right?
Right.
It's this idea of businesses and governments, too, looking at where stuff is made and actively trying to shift those patterns somewhat.
So it feels like a more conscious move away from that really deep integration we saw building up before 2016.
I think that's fair to say.
Okay, so if we're maybe buying a smaller share of our imported goods from China, the big question then becomes, well, are we starting to make more of that stuff ourselves here in the U.S.?
That's the logical next step, isn't it? And that brings us right to our second FRAD graph. This one focuses squarely on American manufacturing.
What's it showing us?
It breaks down a few key things. One is investment in structures. Think building new factories or expanding existing ones.
Okay, buildings.
Right. Then there's investment in equipment, machinery, technology, that sort of thing.
Got it.
And also the total output, like the actual value of goods being produced by the manufacturing sector. And finally, the number of people employed in manufacturing jobs.
Okay, 4 different angles. And looking at that graph, what really jumps out?
Well, the line for investment in structures, the factories themselves, that one shows a really noticeable increase, particularly since about 2020.
A big jump.
A very big jump. The FRAD blog actually describes it as more than doubling in a relatively short period.
Wow. Okay, so people are building factories. That sounds positive. Could this be it? The early signs of that manufacturing comeback people talk about.
It's certainly a very compelling indicator, right? When companies are putting serious capital, billions of dollars, into building new production facilities on U.S. soil.
Yeah.
It definitely suggests they're making a longer-term bet on manufacturing goods domestically.
Oh.
It implies they see a future, a profitable future, in making things here.
But then you look at the other lines on that same graph.
Right.
The actual output, the number of jobs, even the investment in equipment inside those factories.
Yeah.
Those haven't shot up in the same dramatic way. Not yet, anyway.
Exactly. And that's a really crucial point. Why the difference?
Yeah, why?
Well, the FRA blog analysis offers good perspective here. It points out that building the factory, the structure, is often just the first step in a much longer process.
Ah, okay.
It takes time, right? You have to design it, build it, then install all the complex machinery, hire, and train the workers.
You can't just flip a switch.
You really can't. It's not instantaneous. You won't see that surge in production and employment the day the ribbon is cut on the new building.
Yeah.
It's more like planting seeds. You invest first, you build, you prepare.
And then hopefully the jobs and the output follow later.
Hopefully, yes. That's the idea. It takes time for those investments to translate into actual production increases in hiring.
That makes sense. It's like laying the groundwork. And didn't the F-Raid blog also mention something about how they presented this data to make comparisons easier?
Oh, right. Yes. To really compare the growth rates of these different aspects, the structures, equipment, output, and employment, they indexed all 4 lines back to a common starting point. January 2010, I believe.
So everything starts at the same level on the graph back then.
Exactly.
Yeah.
It lets you see clearly which areas have grown the most relative to that 2010 baseline. Even if their actual dollar values or job numbers are very different, it highlights the relative changes.
Gotcha. Okay, so let's try and connect these two big trends for everyone listening. On one hand, we're seeing a smaller slice of U.S. imports coming from China.
Yep, down from that peak.
And on the other hand, we're seeing this really significant jump in investment, specifically in building manufacturing structures right here in the U.S.
That's the picture the data paints.
So is it too simplistic to think these two things are directly linked? Like, because importing from China became maybe more expensive or riskier, companies are now deciding, okay, let's build it here instead.
I don't think it's too simplistic at all. It's a very logical connection to draw.
Hmm.
Think about it if the cost of importing certain goods goes up, perhaps due to tariffs,
Right.
or if companies get concerned about, say, supply chain disruptions or geopolitical risks associated with concentrating production in one region.
Which we've definitely seen worries about recently.
Absolutely. Then, naturally, producing those goods domestically starts to look more attractive, more resilient, maybe even more cost-effective in the long run.
So that increased attractiveness could be the very thing driving this surge in building factories here.
It seems highly plausible, yes. The economic incentives seem to be shifting, pushing towards more domestic investment, at least in the physical infrastructure.
But, as we just discussed, it's clearly not an overnight switch.
Definitely not.
The fact that the output numbers and the employment numbers haven't kept pace with that building boom, it tells us this transition, if that's what it is still very much in its early innings.
Exactly. It's a process that's unfolding, not a finished story. While this big uptick in investment in manufacturing structures is, an encouraging sign.
Yeah, it feels hopeful.
It does, a sign of potential reshoring, bringing production back home. But it's really crucial to remember the global economy is incredibly complex and dynamic.
Right, it's not just about China and the U.S.
Not at all. Many factors influence where companies decide to make things: labor costs, regulations, logistics, access to materials, access to markets. It's a big puzzle.
So this data gives us a really valuable snapshot, a glimpse of potential shifts. But the final picture is still developing.
Precisely. It shows us where some significant money is flowing right now, but the long-term implications are still taking shape.
Okay, so let's try to sum up the key takeaways for everyone. It seems clear the U.S. is importing a smaller share of its goods from China compared to the peak years.
Check. Down from about 22% to around 14%.
And at the same time, we're seeing a really significant surge in investment going into building manufacturing facilities, the actual structures here in the U.S.
Double check. Investment in structures has more than doubled recently.
However, the full impact of that new construction in terms of how much more is actually being produced and how many more people are employed in those factories, well, that seems to be lagging behind.
Yeah, that part of the story is still unfolding. It takes time.
So it really leaves us with a fascinating question to chew on, doesn't it?
It does.
Is this big increase we're seeing in building factories, is this the start of a genuine long-term trend? Are we really seeing manufacturing come back to American shores in a big way for the foreseeable future?
Or, will other global forces, maybe shifts in technology or changes in trade patterns with other countries, or just overall economic conditions ultimately dictate where American manufacturing heads next?
Right. It makes you wonder, what other data points should we be watching? What else might give us clues down the line about whether this is a temporary blip or a fundamental shift?
That's the big question. Something definitely worth keeping an eye on.